Everything about XRP and the broader crypto market could change as early as tomorrow. The day started with some important macro-level news. The latest jobless claims data came in at 208 compared to a forecast of 213 and a previous reading of 199. This tells us that job losses remain lower than expected, signaling that the labor market is still relatively strong. Markets interpreted this as a sign that rate cuts may stay off the table for longer, and uncertainty around liquidity is something markets don't like. As a result, most risk assets sold off shortly after the data was released. XRP moved in line with the broader market, dropping sharply to around $2.06 before bouncing. At the moment, XRP is trading near $2.13. On the 4-hour chart, XRP briefly lost both the 13 EMA and the 48 EMA, which points to short-term weakness. However, when we zoom out to the daily time frame, something important happened. Price touched the crossover zone, triggered a buy alert, pulled back into that level, and then bounced. This is a critical technical area, and one of the reasons why tomorrow could be so important. Most people only look at price. They don't consider positioning, structure, or what might come next. That's why planning always beats guessing. Quickly, I want to mention the 100X Club. This is where we focus on weekly stock alerts with major upside potential, crypto insider insights, and simple frameworks that help you think and act like the top 1%. If you want to build real wealth, you have to start thinking differently. Learn how to get in early, manage risk, and grow your money intelligently over time. You'll find the details in the pinned comment if that sounds like something you want to explore. Now, let's get back to the market because things are getting interesting. One of the biggest XRP developments today is that the first XRP spot trading pair has officially gone live on Hyperliquid. This is a major milestone. Through Flare, FXRP is now available for spot trading, marking the first time XRP has ever been traded this way on the platform. This isn't just another listing. It expands real-world utility. Every time XRP is added to new trading environments, especially spot markets, it becomes easier to use, trade, and settle. Liquidity is the bloodline of markets. While these changes don't always impact price immediately, they matter significantly over time, especially as funding cycles shift. Another development flying under the radar is the reported collaboration between Amazon Web Services and Ripple to enhance the XRPL. According to reports, AWS Bedrock's AI capabilities may be integrated into the XRP ledger. If fully implemented, this could reduce system log analysis from days down to just minutes. That's a big deal. Monitoring, diagnostics, and system analysis are among the most complex challenges for large-scale blockchain infrastructure. Faster diagnostics mean faster response times, higher uptime, and greater confidence from institutions and governments. This is how serious infrastructure gets built, quietly at first and then all at once. Now let's talk about risk. We recently saw Zcash drop nearly 20% in just a few hours after reports surfaced that members of the core development team had left due to internal disagreements. The market reacted instantly. Confidence was shaken, price dropped, and then, interestingly, it rebounded. I'm not sharing this to spread fear, but to stay honest. Internal conflict can happen in any project. No project is immune, Ripple included. To be clear, there are currently no signs of this at Ripple, but as investors, we always need to pay attention to leadership, team cohesion, and risk management. This is why diversification, position sizing, and staying informed are essential. Looking at XRP now, we see a mix of short-term uncertainty, strong technical levels, infrastructure growth, and increasing utility. At the same time, the broader market is approaching a potentially volatile moment. Geopolitical tensions are rising, particularly in the Middle East. Reports suggest limited internet access and restricted communication in Iran, which historically signals internal instability. There are also signs that the U.S. could become more directly involved. Markets don't react well to uncertainty, and risk assets like crypto are usually the first to feel the pressure. Another key event coming up has nothing to do with crypto directly. The U.S. Supreme Court is expected to rule on Trump-era tariffs. There's currently a high probability that the court will rule those tariffs unconstitutional under existing law. If that happens, it could have major implications for liquidity, government finances, and investor sentiment. In the short term, markets may struggle with uncertainty. In the long term, reduced inflation and looser monetary policy could benefit risk assets like crypto. But markets don't move on long-term logic first. They react to fear, positioning, and surprise. This helps explain the recent pullback in XRP and the broader crypto market. It's not panic selling, it's cautious repositioning. We also saw something notable in XRP ETFs. January 7th marked the first net outflow after 36 consecutive inflows. That might sound concerning, but it's completely normal after a strong run. ETF investors often lock in profits after 15 to 20% gains. That doesn't end a trend, it pauses it. Context matters. Political tension, a major court ruling, ETF profit-taking, and macro uncertainty are all happening at once. None of these are catastrophic on their own, but together they increase volatility. This is a transition phase, not euphoria, not fear, just caution. There's no guarantee of a massive move tomorrow, up or down. What tomorrow does promise is clarity, and once uncertainty fades, markets tend to choose a direction. Stay disciplined. Watch how price reacts, not just the headlines. Track volume, key levels, and sentiment. Emotions shift before price does. If this breakdown helped you, don't forget to like the video and subscribe. Welcome to Crypto Express, and I'll see you in the next one. Rock it.